Now, before you can expand your business, before you add another location, before you take it to the next level, I think you have to have a path to profitability. Because if you do not have a path to profitability and you start expanding your business, what you're really going to do is you're just going to lose money faster. Because if you think about it, you have one location and you're like, hey, I want to add another location. Well, if you don't really have a path to profitability, like you haven't figured out like, hey, what's the right amount of sales that you need? Or can you control your cost enough so that when you do expand, you're not losing more money? It's because I will say that yes, having more sales is an essential part of, you getting to profitability, and being able to increase your sales is great, but you want to make sure that you can increase your sales and control your costs so that the additional costs aren't eating away at the new sales that you get. Because one of the ways that I usually walk clients through this is, let's start from the top of your income statement. Now, you have your sales or you have your revenue, and then we have what I like to jump down, the gross margin. That's taking your revenue minus the cost of what it actually takes you to deliver the product. So let's say if you have a restaurant, so the cost of the food and like the waitresses, the waiters, the chefs, like all that cost gets subtracted from the revenue to say, okay, what's your gross margin, or what's left over to cover the operating cost of the business, like the manager's salary, the lights, the security system, the rent, the electricity, the general supplies for the business, stuff like that. Like, what's the cost to cover? What is it to cover that? Now, if your gross margin numbers are not high enough to actually cover your operating costs, the first thing that I always say is, how do we maximize the revenue at this first location? Like, is it a revenue problem? Is it that you need to increase your revenue? And then if we realize that, hey, it's not a revenue problem, then let's look and see, okay, all right, what can you do to get your food costs or your product costs down? Are there different things you can do there? Because even if you can reduce your product cost by, let's say, a 10% or 18% or something like that, what that's going to do is it's going to increase your profit margin, and it adds to the bottom line of your business. And then the third area I like to look at is, let's look at your operating expenses. Are there things that you're spending money on that you probably could improve or you probably could change? Because if you can figure out how to make your organization operate in a lean way, you can probably achieve profitability. But the thing is, if we don't go through this exercise at the first location, adding a second location will just add to your problem. So you want to make sure that if you're going to expand, you first have a path to profitability, or you achieve profitability at the first location. So when you expand, you're expanding your profits and not expanding your losses. Thanks for tuning in to the Business Talk Library. If you like what you heard and you want to hear more, be sure to click the subscribe button and follow us on all social media platforms as the Business Talk Library.